Alright, welcome back to Midcap Mantra. Thomson Reuters on Tuesday gave up the awards for the Starmine Analyst Awards for 2009-10, and for the real estate space, the best earnings estimator, and the award across the category, and the award went to Bhaskar Chakraborty of IIFL. We thought it best to probably get him in the studios and talk about his views on how the earnings, the likely outlook for the real estate industry will shape up going ahead over the next 12 months, and what you as an investor should do with these stocks. Bhaskar, really appreciate you joining us in the studio today. Thanks so much for taking the time out, and congratulations on the award, of course.
Thank you.
Everybody right now is working with a scenario that, hey, real estate prices across the board are going to drop, and therefore the logical thing that if the prices are going to come by around 15-20%, you wait for the stocks to correct by at least 20-25% before you even think of buying into them. The stocks have corrected quite a bit already. What's your sense? I mean, would that be the logical way you would play this space, or that wouldn't be the way you would do it?
Well, in our mind, we think the key thing now to look out for is these developers showing real commitment towards improvement in operating cash flows. If you look at 2010 calendar year and then now 2011, volumes had been really good over the last 18 months. They have only started slowing down in the last 4 or 5. If operating cash flows are not reflecting those high volumes, it's a big disappointment for investors. We think any developer who improves operating cash flows now for 2 quarters will see a huge bump up in stock price.
So how would it happen? I mean, would it happen for the Bombay-based real estate players because the offtake on volumes, even though has slowed down, would probably be higher in Bombay, or would you look at other geographies, and are there any particular companies that you have in mind?
We think Bangalore appears to be on a much more even keel than Bombay and NCR market right now. In Bangalore, we think prices are still reasonably affordable. Apartments are still available at about 70 to 80 lakh ticker prices. We think volumes in Bangalore will be more sustainable. Developers there have shown commitment in reducing debt by selling off land. So the likelihood of improvement in operating cash flows is stronger in Bangalore than we think in Mumbai and NCR, where volumes are clearly falling. So we prefer, for example, Shobha developers, also Godrej Properties, who have a pan-India footprint, including quite a few cities in southern India.
What's the call as far as individual companies is concerned right now? I mean, which are the companies that you would perhaps recommend, since you are talking about the sector being largely under-owned?
We continue to prefer Godrej Properties and Shobha developers in the space. Godrej Properties because it is a pan-India residential player with the average ticket price point of about 3,500 rupees a square feet, about 25 to 30% lower than a Unitech or a DLF, who have a price point of above 5,000 rupees a square feet. And by the way, Godrej delivers all its projects through construction from L&T. So that's a strong combination of available at a much more affordable price point. So we think in terms of its product's attractiveness, Godrej ranks pretty high for us. Shobha also, yes, because over the last 1.5 years it has reduced debt from 1,900 crores to about 1,200 crores right now. Price points are very reasonable. We think Bangalore market is on an even keel with strength in the IT markets continuing. So these are the key 2 buys for us in this space.
What about DB Realty and the problems ensuing there for investors?
I think DB Realty's problems have a little bit to do with, far less to do with real estate and much more to do with non-real estate businesses, so I won't be the best person to comment on that.
Okay. Bhaskar, one final word really before we let you go. I mean, again, the call would be that even if there are stocks that look attractive within the space, would this be the right time to venture out and buy into real estate companies? The argument for would be that the stocks have corrected so much that the downside is probably protected. And the argument against would be that, hey, you never know with this sector because people, as you said, are generally just avoiding this sector point blank. What are you advising clients? I mean, selective cherry picking is the order of the day, or still wait for some time?
Well, we think we should wait for some time. We should see far more commitment, like I said at the outset, from promoters to improve operating cash flows in these businesses, so that they start reducing debt a little bit on their balance sheet through their operating cash flows. Once that happens, that will be the key trigger point for us to start pushing these stocks.
Okay, Bhaskar, and I believe from what you said that your top 2 stock ideas for the next 6 to 12 months remain Godrej Properties and Sobha Developers.
Correct.
All right, great. Thank you so much. Really appreciate you joining us today and giving us your sense on the real estate space. And congratulations once again on the award.
Thank you.
Well, not too many people have guessed the earnings of this space very correctly. Bhaskar Chakrabarty, for obvious reasons, the award winner for the best earnings estimator. Look out for Godrej Properties.